Yolevski. She's Chief Operating Officer of Royal LePage Real Estate Services. She joins us here in studio. Nice to see you.
You too. Thanks.
So the stock market was very closely watching what the Bank of Canada would do. So has the housing market. And I guess on the idea of, okay, we've gone down 25 basis points. It's a modest start. What's happening behind the scenes? What have you been hearing from buyers and sellers?
Well, the decrease was modest. It's really about consumer confidence and what the signals from the Bank of Canada, what that's going to do for consumers that have been waiting on the sidelines. As we all are aware, there's a number of consumers that said, I'm going to ride this out. I'm going to wait, one, because I don't want to get into housing where I'm going to see my own rate go up. Two, I might not be able to afford a home right now based on interest rates. And three, I don't want to pay for a house today that might be less expensive tomorrow. I want to see what these rates do to prices. So now that we're moving into the easing cycle, we're going to see consumers come off the sideline and resume their plans to buy homes.
So it's a consideration, and maybe it's a positive consideration for the market, but it's not going to be the end all, the determining factor just moving once on interest rates.
No, it's about a mindset, right? You need people to feel confident that they can make this purchase, that also that this purchase is going to be a good investment for them. That matters very much to Canadians, that housing is a good investment, and that also there's some security in the rate, that if they buy a house today, they're not going to see what happened to those that bought during the ultra low rates. They're not going to see rates go up by a large amount and be caught feeling like they're scrambling to pay their mortgages.
Yeah, and I guess we'll find out what happens in the next few months, but there is an indication from the Bank of Canada that if inflation trends improve, that they would feel more confident in lowering rates more. We've already this morning spoken to a number of economists who are predicting that could play out. And so I guess that would be one of the determining factors. I mean, if there are other considerations at play outside of interest rates that the housing market's going to watch, like what are going to be the determining factors you think over the next 3-4 months in the housing market?
Well, one of them certainly is going to be price. And what we saw is that when rates originally started to rise back in 22, prices did decline. Look at our major urban centers, Toronto, Vancouver. We did see that dip. However, we then saw resiliency in the housing market. We saw prices rebound to a certain extent, and we've seen them stay very stable since then. Small increases as we've moved through the beginning of this year. That is likely to continue. So people are going to be looking for, are prices going to go up dramatically from this? Are they going to go up at a more reasonable pace? It's likely that they're going to go up. So people are going to be wanting to time that purchase so that they're not paying more for a house, and then that will negate some of the savings that they see in those interest rates if Bank of Canada continues to lower them.
And Karen, can you talk a little bit about the supply dynamics? Because at least, and every housing market is different, but at least in some of the markets that we've seen, maybe Toronto's an example as well, there's been an increase of supply, like people ready to sell, and then it seems like a little bit more inventory. Maybe that was people waiting to actually pull the trigger until they got a little bit more clarity on issues like the Bank of Canada. But is there a bit of a supply hangover to work through that also factors into price as well?
The supply that we're seeing now is likely transient. It's going to be temporary. It's going to be absorbed by those that are coming off the sidelines. What we saw this spring was that sellers, with a lot of signaling from the Bank of Canada that we were near the end of the cycle, we were going to move into easing, we saw sellers position themselves. We saw them come to the market a little later in the spring than typical. We saw a lot of inventory come to market in May, which is typically towards the end of the spring cycle. And that was on the assumption that things are going to start moving. Sellers also need to be able to buy homes often themselves, right? They're not just sellers, they're buyers. So it's a bit of a dance where you have to list your home and then have confidence you're going to be able to get into a home. And that next home has to be available, right? There has to be supply there for you to feel confident to say, I can sell my house, buy another one, and this is going to be a smooth transaction.
Well, I guess there's this other issue that we talk about all the time, which is that we literally have seen record population growth in the country as well. So if the economics of Canada mean that there are more people in Canada, how does that play in as one of those supports to prices that you seem to be alluding you're seeing some supports for prices?
Supply is an ongoing issue in the country. And when we see things like people step to the sidelines because of interest rates, we can be under a false illusion or assumption that supply is not an issue. But that would be incorrect. So long-term and medium-term supply, a grave issue in Canada. We simply do not have enough units being brought brought to market, and we've seen a pullback on units coming to market, new housing coming to market, some condominium developers stepping back, economics not making sense on projects. So we're actually creating more of a supply issue down the road. You've got immigration, you have people that have been waiting for a couple of years now to come off sideline, and you have a slowdown in construction in certain asset classes. So we're actually building up a greater future supply problem that is very tough, despite government regulation and announcements, tough to catch up on.